Hey, it's Rav. Welcome to the Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. We've got a great show lined up. Before I tell you anything about the show, I'm very excited to go to our mortgage specialist extraordinaire, as we always do every week, Carmen Caponero. Hello, Carmen.
Thanks, Rav. Well, today we're going to talk about student rentals. For all of you guys out there that are looking to buy an income property and you're having no success getting financing approved on a student rental, there are definitely programs available today to offer financing on student rentals at 80% of the purchase price. Interest rates are slightly higher and they will need a full appraisal for the whole process. And when I say interest rates are a little higher, they're maybe in the 3 to 4% range. So please don't get discouraged. Continue to source out your student rental income properties because they're very, very strong on a cash flow basis, and I think they're very favorable. So go ahead and buy those student rentals. Back to you, Rav.
Thanks, Carmen. Always great to hear your wisdom and your voice. Again, for those of you watching, I'm very excited about this show because we're going to be talking about where to invest your money, invest where returns are best. That doesn't mean that it's necessarily in your own backyard. We're going to take a look at what's happening in the nation's capital of Ottawa. We're going to look at what's happening in Hamilton, Barrie. It's going to be a very exciting show. You want to make sure that you're getting out your paper, pen, calculator, all that kind of good stuff. We might look at a couple of properties. But remember, whenever you're introduced to any type of an investment opportunity, whether it's a business, a franchise, real estate, you always want to ask 4 questions whenever you're being introduced to something. The first question is, what is the return on my investment? What is the ROI? If I put my money out there, I want to get that money back, and I also want to make more money than I put out. You also want to ask, when do I get that? If somebody says the ROI is 20%, meaning I put out $1, I get back the dollar plus 20 cents, but they say that it's over 4 years, then really my annualized ROI is only 5% a year. So it's very important to be able to ask that. The third question you want to ask is, how much is out of pocket? How much do I need to invest in this particular endeavor? So is it $25,000? Is it $10,000? Is it $200,000? You want to know that up front, obviously. And lastly, you want to look them right in the eyes and you want to ask them, what is the risk? What is the worst case scenario? So for example, if yours truly, Rav, was introducing an investment opportunity for you, you want to ask the question, so Rav, what happens if you're no longer around? What happens if, the good Lord were to take you away? I'd say, well, that would be wonderful for me, but come hear me on a Sunday morning, and that's a different conversation to talk about. But you want to ask the person, if they're no longer in the picture and I put my money there, am I still going to make my money back? So those 4 questions are very important. What's the ROI? When do I get it? What's the minimum amount needed? Is it cash? Is it registered monies, meaning RSPs, RESPs, LIRA, TFSA, all that kind of good stuff? And what is the risk, the worst case scenario? You know, before we talk to our guests who are experts in their locations of where to invest, I want to just simply talk about, I get a lot of phone calls, get a lot of emails. People really are hungry and want to learn how to make money. It's very hard to do it in the securities world, meaning mutual funds and RSPs and all that kind of good stuff. And so people are really hungry to take their dollars, put it out there, and make more dollars coming back. But the question that begs is, and of course we're going to do that, the best way to do that, in my opinion, is in real estate investing, whether it's a buy and hold, whether it's a buy, fix up, refinance and hold, whether it's a buy, fix up, sell, which is, I guess, is a flip, whether it's a rent to own, whether it's investing in mortgages, whether it's private mortgages, group mortgages, whether it's in land development, whether it's in things that, we can discuss in the weeks to come, REITs and mix and all that kind of good stuff. That's how we're going to make our money. But the biggest question is why? Why do you want to make this money? We have to be very careful, my friends. Sometimes we get into this whole investment game. Very few are going to leave their day jobs, and nor should you if you're enjoying where you work and what you do. So we have our day job, and then we're becoming investors, and sometimes that's a job, and now we have 2 jobs, 3 jobs, 4 jobs, and we're miserable. So you have to really make sure you understand why you're doing this. In my opinion, it's pretty much the same reason for all of us. The reason why we do this, 4-letter word, starts with T, is because we want time. We want to invest our money so that we have the time to be able to use that money to do what we want, when we want, with whom we want. That's the real reason. I mean, if you really look at the most joyful things in life and what makes you the happiest, it is with family and friends. It might be going into the local, for me, it's the greasy Indian restaurant and having fun there. It's going for walks with the family. It's watching Little House on the Prairie, all that kind of good stuff. For me, I want that time. And what investing in real estate allows me to do is it allows me to work less, be able to have this cash flow, if you will, to give me the time to be able to do what I want, with whom I want, all that kind of good stuff. So just a little bit of a tidbit. Take it for what it's worth. And really look forward to this show as we're going to talk to three really good friends of mine who are experts in their geographic area. You don't want to miss this show. We'll be right back in just a moment. Thanks for watching. Whenever you're considering to invest in real estate, always ask the 4 questions. What is the return on my investment? When do I get that return along with the money I put in? What is the minimum cash amount needed? And what is the risk in the worst case scenario? Hey, it's Rav. You're watching The Everyday Investor. I'm super excited about this show. We're talking about investing in different geographic regions. It doesn't have to be just in your own backyard. First off, we're going to be taking a look at Hamilton, and there's nobody else I'd rather have on the show talking about investing in Hamilton than James Meggs. He's a investor coach. He's a realtor. He's an investor himself with many properties. James, great to have you on the show.
It's a pleasure. Thanks for having me.
Again, you've been on the show, I think, a couple years ago, and
yes.
That was very exciting. So, talk to us a little bit. We're gonna look at the promised land of Hamilton, if you will, Steel Town. They used to call it. I don't know if they still call it. Home of the Tiger Cats.
That's right.
And oh, there it is, right there on your shirt. But before we even get into that, let's not talk even about Hamilton.
Right.
Let's talk about James, and let's talk about his philosophy in life, whether it's a spirituality, a relational, and how does investing play into that, and why is investing in real estate good for things like that? You know, at the top of the show I talked about, and I know you agree with, so I don't want to give it all away, but it really is a great vehicle to create time for ourselves to be able to do what we want, when we want, with whom we want. What are your thoughts on that?
Exactly, I agree 100%. For me, the big reason I transitioned into real estate at the very beginning was because I wasn't satisfied with my job. I wasn't satisfied with the amount of time I had with my family, with my daughter, all that stuff, right?
How old is your daughter now?
My daughter's 6 now,
6.
But at the time, when my wife was about 8 months pregnant when we bought our first property. Yeah. Right. So for me, it was looking to the future and seeing what can this do for me, and I knew what it had done for other people. So that's kind of the path I wanted to take. And so what real estate has done is enabled me to leave that job that I wasn't satisfied with, that I wasn't happy at, and I've transitioned into real estate where I'm helping other people to fulfill their dreams to do what I've done as well. Yeah. So it's just been fantastic, and I love being able to do what I do and see the successes that a lot of my clients have had. Yeah. Yeah, I mean, it's so important. I mean, and I think that's the biggest, you talk about your spouse, your daughter. I think that's the most important thing. The friends around us, our neighbors. Right. We don't have, I mean, it's the greatest currency that exists. We know how to spend it, but how do you get it? Right? How do you get more time in your life to be able to enjoy your family, to be able to enjoy your neighbors, your friends? So no, that's very inspiring, and thank you for taking the time to come on the show to share your story. And what I love even more, maybe not even more, is equal, is that you're sharing it with others and being able to help people as well. So let's talk about Hamilton and what's happening in Hamilton. I know, Toronto, I have a lot of friends that still invest in Toronto. I'm involved in a lot of land deals in Toronto, but they're hard to find, very expensive. And so if you can go kind of an hour and change away from the core,
I know it's a good thing. Tell me what's happening in Hamilton and why it's really good there.
For sure. So Hamilton, I mean, exactly one of the main reasons you said is, so I think a few months ago, the average price of a detached house in Toronto hit about 1.3 million.
It did, yes.
So I was looking back at our stats. Currently, the average detached in Hamilton, which encompasses a large geographic area, but just to give you an idea, is about 450,000.
Stop.
Yeah.
Okay, so hold on. So downtown Toronto, you know, there's an article out there that you could buy a small apartment building in the United States for the same price that you would buy a detached property downtown Toronto.
Right.
So in downtown Toronto, the core metropolis, to buy a detached home, not that big, you know, 1,800 square feet, 2,000 square feet, it's going to cost you over $1 million.
Right.
You're saying it's less than 50% off if you were to buy an hour away in Hamilton.
Exactly.
And so what would and so the rents in Hamilton are, I mean, it's not on the same, not
on par, but we've seen a huge increase. So from the time that I've been investing in the past 5 years, we've probably seen an increase of at least $100 a year on the average rents. And so they've been keeping pace with the increase in price as well. So not only are we getting great cash flow, we're getting great appreciation, we're getting kind of the big whole.
No, what I meant with that, about that is I'm saying, let's say it's $1 million in just say it's $1 million in Toronto and it's $500,000 in Hamilton. If you get $3,000 a month in Toronto, you're not going to get $1,500 in Hamilton. You're actually getting more.
Correct.
That's what I mean, that it's not on par. So a lot of people do it because, you know, a nurse who works in Toronto and a nurse who works in Hamilton, they make the same wage, pretty much, but therefore they can pay a lot in rent, but my purchase price is a lot less.
Exactly.
Okay. Yeah. So what is one of your favorite investments? What do you like in Hamilton right now?
Right. So for me, I'm a big fan of single family.
Single family.
Exactly. We talked about protecting our time.
Yeah.
Unless you've got a property manager that you trust and everything, we do have a few that we work with, but for me, single family is where it's at. I've got properties that I've had the same tenants in there for 3 to 5 years.
Can you just define that for the viewers at home? What is a single family as opposed to?
Yeah, so we can have a single family where you've got one set of tenants who are living in one house, usually a detached home, three bedroom, 2 bathroom, versus say a student rental or a multi-family.
Or even a duplex where somebody's living upstairs, somebody's living downstairs.
Exactly.
You prefer one rent for one furnace.
Right.
That's very interesting. So talk to me a little bit about that.
So I just found it's been so easy to manage. So I do actually own a triplex, and I found, you know, going back to kind of the 80-20 rule, per your principle, for those who aren't aware, and that one property has been the 80% of my time out of the entire portfolio.
You got to teach the Pareto principle now. So what is it? Teach that.
It's that you're going to spend, in this specific example, I'm spending 80% of my time on one of the properties and 20% of my time on the rest.
Yeah.
Right. So there's that one property that's eating up a huge chunk of my time.
And you're spending 80% of your time on the triplex, and it's really only giving you 20%, maybe more of a bump than the singles. Right. And with the singles, you're spending 20% of your time, and you're getting 80% value out of it. So in your opinion, it's better for you. Everybody's different. For you, you like the 3-bedroom, 2-washroom. Yep. I'm guessing kind of, would it be a raised bungalow, or it doesn't matter, 2-story?
All over the map. Doesn't matter.
All over the map. Yep. Okay. Yeah. And in Hamilton, we go with numbers for a second. Sure. How much do we need? What's the typical? I think you said 400,000.
450 is kind of on the higher end.
450 on the higher end.
Right.
Okay.
Most of our clients and myself are looking probably in the low 3s to maybe a high 4 if you've got, you know, an in-law suite in the basement. Okay.
So if I just for fun here. I'm Indian and I like my numbers. Mm-hmm. So if I have 4 and butter chicken, if I purchase a property for $400,000, which is very doable.
For sure.
And can we? Yeah. Is that a good number?
That's high. Yeah.
Okay. That's high. Yeah. That would be high.
Yeah.
Okay. So let's not go so high. What's average single family where I can get some great tenancy in there?
I'd say about 300.
300. Okay. Yeah. In Hamilton.
Yep.
Wow. Okay. So 300K. And we still have the same rules where if it's a secondary unit, I need to put down 20%?
Yes.
20%. So I'm putting down 20% on 300,000 is $60,000. And then are these kind of turnkeys, or do I have to put a little bit of lipstick in there?
Most of the clients we work with and myself, I like the stuff that needs about 5,000 or 10,000. That's about it.
5,000 or 10,000. Okay. Yeah. And then how much for closing costs?
About 5,000.
About 5,000. So let's just add another 10 grand then. Mm-hmm. So we'll say 10 grand to close. So I'm at $70,000 to buy a $300,000 property.
Right.
over the last, because you've been doing this for a while, as long as you look, you've been in the game for a while. Over the last 5 years, what would you say is the average, just natural passive increase? So today I buy it for $300,000. Next year it's worth what? What percent would you give on that, on average?
On average, so looking historically, it's changed since I started buying. It's kind of hockey sticked up, right? So we've seen a huge increase, but right about now we're seeing anywhere from 10 to 12 on the high end, about 15% appreciation.
Yeah, and I know that. I know it's been about 15% appreciation. That's why I kind of want to go on a 5-year. So what do you feel comfortable, teaching your nephew that, hey, if you buy this property, you could get, what do you feel comfortable saying? 5, 6, 8, 9? What would you say that we can kind of predict over the next few years?
I like to say about 10%. 10% is what we're seeing. Is it's pretty safe.
Okay.
Though, as a caveat, when I run my numbers, I run them at 0, just to make sure that they work.
You run them at 0?
Yeah, 0% appreciation.
So your appreciation is gravy.
Exactly.
And so where the meat of yours is Bob and Sue, your beloved tenants, paying down your mortgage.
Exactly, and cash flow.
And some cash flow.
Yeah.
Okay. So, but you're saying 10%.
Right.
On my $300,000.
Right. So that's what I'm getting, but that's I don't bank on that, just in case.
No, but I mean I think that's wonderful. So you're saying $30,000 I'm making on my $70,000.
Right.
So just on the dessert, just on the gravy, just on what I don't want to bank on, I'm making, what's that, 40%?
Yeah.
Right? Yeah. Is that 40%? I mean, if it was 60 on 30, it's 50%.
Right.
So I'm making 40-something% on that, just on the appreciation.
Right.
Wow. And then when there's debt reduction, somebody paying down mortgage, when there's a little bit of cash flow, and that can happen today.
For sure.
Okay.
Yeah, ongoing. We're doing it every month, daily.
And so where, for people who are now Googling Hamilton, for those that are watching from Hamilton, Hamilton's what, 500,000-600,000 people. It's not a small city.
Right.
I think the population is about 500,000 people or more. Where are some nice pockets? Tell us a little bit about Hamilton. What's happening there?
Sure.
They have a great university, I think.
They do. McMaster is down there. Mohawk College is there. So those are two of the bigger areas that we look for student rentals.
Yeah.
But the $300,000 range, you're looking down in the lower city, which has for the past 5 years seen an immense transition.
Yeah.
So it's gone from gentrification to that's where the demand is right now.
What does that mean?
Where you've
gentrification.
Seen where you're seeing an area that has been kind of downtrodden and repaired, and new people are coming in and doing improvements to the proproperties, which are driving the prices up, which are driving rents up.
And you're having a big art scene there too. There's a lot of not thespians, I think they're actors, but you're having a lot of painters and sculptors, and there's a whole kind of, I know a lot of people from Toronto, even King Street West, and they're kind of making their way out there as well, I read.
Yeah, they had this Hamilton Supercrawl, which is a massive event that has all the art galleries that people can walk door to door and check it out. Yeah. But the rents are so much cheaper than Toronto that the artists are coming down to James Street North to take advantage of that.
No, that's fantastic. And what's happening with transit in Hamilton?
Exactly. So that's the big thing that everyone's talking about is the LRT, so light rail transit. Yeah. So the federal government has pledged $1 billion to implement light rail transit.
Sorry, excuse me?
$1 billion.
$1 billion.
Yes, $1 billion to implement light rail from McMaster all the way out to the east side of Lower Hamilton. So the next stage in the process.
So from the university all the way to the east side of Hamilton, which is closer to Toronto, like downtown, east, no?
No, further than that, closer to Stony Creek.
Stony Creek, okay.
Yes, so heading out east.
So there'll be a rapid train there, and then from there, you can go anywhere. There's a GO train system there.
That's the whole plan too. It's going to tie into the new Metrolinx expansion of the GO train.
Okay.
Yeah.
Great.
So it's going to be easy to get to Toronto. It's going to be easy to get to Niagara. So it's just going to be an accessibility hub.
So do you live in Hamilton?
Yes.
Okay. So you live there. So somebody's watching this show and they live in Kapuskasing, and dry lips ought to move to Keswick. I think that's a play or something. And they're watching the show, and they're thinking, man, that sounds interesting. How does that work? How does that work with James? If James is an investment coach, right? How does that work with him? We've got about a minute to be able to share what's next steps and how people can get a hold of you.
Sure. So if you're interested in buying either investment or even just primary residence, you can reach out to me through email or our website. So mrhamilton.ca is where...
mrhamilton.ca?
mrhamilton.ca.
Okay, and you're on there? James is on there?
Yes, I am. Okay. So I'm part of the team, I'm the Mr. Hamilton team.
Yeah.
Or just my name, james@mags.ca.
Okay, great. And yeah, fantastic. You have to come back again on the show.
It's been a pleasure.
Yes.
Thanks, sir.
We've been talking about James. I'm flustered. He's making a lot of money, and he doesn't even care about that portion of the money. You're watching The Everyday Investor, and when we come back, we're going to go to Barrie, Ontario, and see what's happening there. Thanks for watching, everyone. Did you know that you don't have to purchase close to home to own a successful investment property? It's more important to invest where the returns are best than in your own backyard. Hey, it's Rav. Welcome back to The Everyday Investor. We're talking about investing in places that aren't necessarily in your own backyard, aren't necessarily in your own neighborhood, even in your own city. We were talking to James Meggs, and he was talking about what's happening in Hamilton. I'm very excited for my next guest to be on the show here. Not for her, I'm excited for myself. I've been trying to get her on here for the 12 years that, okay, maybe not that long, but I've been trying to get her on the show. Not just because she's a wonderful person filled with lots of knowledge, but because she's in a great area in the city of Barrie, Ontario. Shannon, it's great to have you on the show.
Thank you.
Shannon Murray.
Shannon Murray.
Thanks for being here. And, you know, we've been friends for a while, and I love, you know, your spirit and your love for life. And we like the same comedians, and you go to concerts, and you were a former, you don't tell people, but I'll tell people, you were a former maybe semi or professional dancer in your time, and now you're making money in real estate, investing in real estate, helping people do the same thing as an investor, as a coach, as a realtor. You know, the same reasons I talked to James about it, I started the show with it. You know, and I was talking to you before the show, I've never experienced more anxiety in my life than about 15 months ago when I realized, wow, my son's almost 16, my daughter's 13. Have I been a good dad? Have I spent lots of time with them? And, you know, I look back and they tell me, and they say, Dad, what are you talking about? But in my mind, that's how I feel. There's nothing better than time, to be able to have the time. Nothing replaces time to be able to enjoy with loved ones. I know you feel the same way, but talk a little bit about that marriage between investing and what that can do for us and spending time with loved ones.
Absolutely. I mean, we share that same passion and love of family, and you know, as you're building your future, but you're also your lifestyle, and what it does is it affords you the opportunity to be able to step back and just get that feedback from your kids. Yeah. I know for myself, I really found it this year by putting my daughter into college, believe it or not, and you know, just wondering where all those years went. So that's the measurement. Yeah. But at the same time, being a woman in this kind of industry, and know that one, I could support my daughter in college, yeah. And two, to be able to have the time to have with her as you know, the flexibility and all those things that it offers. So yeah. It's just very interesting, and I have actually 3 children, so it's just an amazing opportunity of how you can marry real estate to the lifestyle, to your future plans, to today, to all those different things. And then you know what, if you feel that you've made a mistake, you just kind of step back, lick your wounds, and then just fix it, and then just continue on the next day. Yeah,
no, absolutely. And I don't want for you that's watching at home, I don't want you to feel like if you're, you know, now empty nesters, and it's never too late to be able to create passive income and to be able to enjoy lifestyle, to be able to create time for yourself, to be able to do what you want, when you want, with whom you want. And you know, and it's great that we can teach our children that now. You know, I teach my kids, for every dollar you make, give some to charity and third world, but take 20% and invest it. You know, imagine if we did that from the very first paper route we ever had. We'd be a lot further ahead. But it's never too late. We're doing it now, and it's very exciting. And I'm very excited about the people that you're helping. I've heard many people that you've helped. They're very fond of you. Talk a little bit about Barrie, what's happening in Barrie, It's on top of Toronto. It sits up on top. What's their slogan? Do they have a bit of a slogan up there? I think the city above, or maybe that's York Region. I'm not quite sure. But it's about an hour away.
Yes.
What's happening there from an investment standpoint?
Well, it's a premier waterfront community, actually. I mean, it definitely is a place where you can live, work, and play. We have an amazing waterfront that you can actually swim in the water.
What's the water? Lake Simcoe?
Yeah, it's Georgian Bay.
Georgian Bay, and you can swim in that.
Yes.
As opposed to Lake Ontario.
Yes.
Okay.
You can actually swim in our water,
Yes.
so it's quite incredible.
Yeah.
And you know, they've actually, so they've built around it. So we've got our Allendale train station right around the waterfront. So if you want to have that kind of lifestyle, live in a condo and look out to the water, and then, you know, have your commute to Toronto or whatever it is. And you know, we're only like an hour from Toronto. We're an hour to Muskoka if you want to go cottaging or whatever that it is.
Yeah.
It's just really an amazing community, and there's just so many things around there.
And there's been a lot of hype around the transit. Talk a little bit about it. So you're saying I can go directly from, even if let's say I work downtown Toronto, I can take a transit right from the core of Barrie into the city?
Absolutely. I mean, there have been times where I've had to go down to the Metro Convention Center,
Yeah.
and I wasn't outside once. I mean, I literally would go to the South GO train station, whatever I needed,
Yeah.
and then do my work on the train, and then just be right down wherever I needed to, and just so convenient.
Very exciting. And tell me about the education. There's a few schools there, right?
Yes.
In Barrie. Talk about that a little bit.
Yes, the advantage is we have Georgian College as well, and we have a lot of we have a lot of students that are coming in, and you know, whether they're from out of the country or whatever, they just really make it very appealing for them to come in. So we've got student housing, which is a great opportunity for people to invest. We also have Aurelia, which is a very close proximity. So there's Lakehead University. So there's all the different options that are available for students.
Now, there's something happening in Barrie that I've never heard of before. There's actually an incentive. The municipality is giving people an incentive. So if I live in my house and I want to create some income within my own property, let's say a basement suite or an in-law suite, the actual municipality is helping me do that?
Absolutely. It's actually a Simcoe County incentive to help support the affordable housing growth strategy, and they're actually offering you up to $25,000 to be able to create a garden suite within your home.
That I could rent out. And they're doing that. What did you say? What kind of strategy? What was the terminology?
It's an affordable housing strategy.
Affordable housing strategy.
Housing,
okay,
yes.
so to help the people that live there, hey, why not live with Rav in a garden suite?
Yes.
And we'll help you out, Rav, by giving you up to $25,000 towards this.
Absolutely, and it's a win-win for you. So one, you've just become an investor.
Yeah.
Two, you need your own home to live in, so it doesn't matter, and then it's helping you to help offset your mortgage, right?
That's crazy. So you have multiple properties. You are helping people with these properties. How much do I need on average to get into, let's just call it a single family, that maybe later I'm going to build a garden suite into a garden suite apartment, or whatever it's called. There, what's the purchase price for me?
Well, here's the thing. So Barrie is an average sale price of about $420,000, so it's a little bit less than Hamilton.
Yeah.
But the great thing is it's a ripple effect. So you're still going to see an appreciation all around the county. So you can go into other areas like Oro or Aurelia or Midhurst or different areas like that, Springwater,
Yeah.
and then the average sale price can go less, under $300,000.
Under $300,000. So I can get in for my $60,000 down, so on and so forth. And so what's the demographics? Who are you seeing that's moving into Barrie? Is it the empty nesters? Is it the youngins? Is it who's moving into there?
We are seeing people that are selling their houses in Toronto.
Yeah.
For the millions of dollars, as you said,
Yeah.
and
Living for free.
Pretty much living for free when they come. So what they're doing is they're buying their principal residence,
Yeah.
and then they're buying investment properties as well.
And they're living on that cash flow.
Exactly.
Very cool. Very cool. And so the average increase is anywhere, in Barrie over the last couple of years, just passively. I know it's something around.
When I first started investing about 18 years ago,
Yeah.
and people were like, "Oh, Barrie," because it was just the place that we would kind of come club and whatever like that.
Yeah.
And it's just incredible how it used to be to what it is now. And year to date, we're actually seeing like 16.8% appreciation.
16.8%. That's crazy.
It's crazy.
And do you feel, I'll give you the question, that we all get, do you feel like, not even just Barrie, but just I want to pick your brain because you're wise in all areas of this, as of knowing you, and you've nurtured me over the years. do you feel like we're in a bubble? Do you feel like, that, we've got to be careful investing in the different places around the GTA? What are your thoughts there?
Yeah, no, I don't think that we are in a bubble, to be honest with you.
Yeah.
Like we'll see like a small correction, but I also feel that, that we've also taken steps to make sure that things that happen in Canada don't or things that happen elsewhere don't happen in Canada.
Yeah,
so,
absolutely.
and just watch our rates,
Yeah.
really. We're going to take it. That's the biggest indicator for us there. So just watch that.
And we're putting down 20-30% on our properties. It's not like, back in 89, 90 where people were like, oh, it's going to happen again. Well, people were putting down $500, and walking away, and a lot of speculation. And, as James says, I know that you feel the same way. It's not the 16, 17%. That's the gravy.
Right.
If we can just have people paying down our mortgage and having some cash flow, that's really how we, sustain ourselves. The increase is just gravy. So even if that 16% drops to 5% or 6% or 7%, we're still doing very, very well.
Which is exactly why you're actually looking at it from an investor standpoint. So whether you're starting out or whether you're a seasoned investor, you're looking at your spreadsheet and you're going to put those numbers in to protect yourself.
Yeah,
right.
You treat it like a mini business.
You're not speculating. You're going to be an investor.
And I guess that's what you do. You coach people and help them to be able to do that. Mm-hmm. So what's first steps? We still have other people that are Kapuskasing and they've looked at Hamilton. Now they want to look at Barrie. What's kind of, how do we contact you, and what kind of give me a little bit of a highlight what would happen?
Yeah, absolutely. Well, my team and I, so we're the Shannon Murray team, and we cover all of Simcoe County, and they can go to our website, investinginbarrie.com, and we'll go over your financial strategy. So let's say you have X amount of dollars and Barrie isn't really on your radar, then we're going to look at it for you, and whether it's Aurelia or other areas, to make sure that it works within your parameters and cash flow, because that's what's key.
Yeah. The cash flow, obviously, being
the cash flow.
That's what's sustaining. And so, what's your favorite type of property in Barrie? What do you like? Well,
like James, I prefer the single family as well, but only because I made quite a few mistakes. I don't call them mistakes because they're excellent experiences.
Of course, education.
You know. So it was like I had dreams of having the single family home, converting it to a second suite, and then an opportunity came along where I went to a triplex. Then an opportunity came along and went to a sixplex. And what I learned very quickly as a single parent was exit strategy. So exit strategy for me, I love...
Explain that. What does that mean, exit strategy?
Exit strategy. So you do your numbers, and what happens if you have to dissolve all your properties right away? How quickly can you do that?
Yeah.
So can you sell off a single family home more quicker to another home buyer or to an investor compared to a multiplex where an investor is going to come along and you have to disclose everything that you know, and it's strictly going to be cash based.
Got it. It's harder to find people to purchase a sixplex than it is the single family, because the single family, it might be another investor or it might be the end user who actually just wants to buy that property. So that's very important. And I like how you said, it's not mistakes. If we don't learn from them, then they're mistakes. But if you're learning from them, and I appreciate your transparency to even to share that. We all fall in life, and if we can learn from that and share with other people, how much better. So that's the track you're on. You're just buying up single families in Barrie, the surrounding areas of Barrie. Mm-hmm. No, I think that's fantastic, Shannon. Thanks for coming on the show. I appreciate you being here. I know you're doing other gigs and speaking at different venues. The last question that I'll ask you is: you're staying in Barrie? No plans to move to the promised land of Brampton, Ontario?
No, I'll stay in Simcoe County, but you never know.
Yes, very nice. Thank you so much.
Thank you so much for having me.
For being on the show, and you'll have to come back again sometime.
Honored to, yes. Absolutely.
We're talking to Shannon Murray. You want to go to her website and see what's happening, all the good stuff in Barrie, Ontario. When we continue in a moment, we'll look at the nation's capital, Ottawa, Ontario. Thanks for watching, everyone. Did you know that different cities have different restrictions and bylaws when it comes to rental properties? Always research the area before investing to ensure that the strategy will be allowed in the particular city that you want to invest in. Hey, it's Rob. Welcome back to the Everyday Investor. We're talking about investing where places where the returns are best. It doesn't necessarily have to be in your own backyard. We were talking to James. We were taking a look at what's going on in Hamilton. We talked to Shannon. We looked at what's happening in Barrie. And now we have my good friend Tony Miller, who's come all the way from the nation's capital, Ottawa, Ontario. Tony, thanks so much for being here.
Hi, Rev.
It's always a pleasure seeing you. I had an opportunity to come visit and take a look at what's happening in Ottawa. I think that was a year or two ago. I can't remember.
I remember that.
And, we had some great discussions, and we're actually together. We were teaching a group of people.
That's right.
Investing, because you're a coach, teacher, investor, realtor, all that kind of good stuff in Ottawa. But I want to ask you the same question that I asked both James and Shannon. Talk a little bit about the philosophy of investing in real estate. I know you're a family man. I know you value your time. But talk about real estate investing and just kind of the philosophy of life that you hold.
I hold it really, it's really important for me to hold a lot of time, spend a lot of time with the family, whether that's at home or even if they're away, sort of thing. Our daughter's going to college in Oakville, our son's in high school, but having that connection. And it really started several years ago when I was working for the federal government, and I realized I don't know if I want to be doing this the rest of my life, because it was just a routine that we were into. And we decided to change it up, and real estate enabled me to say goodbye to my government job and stay at home. And now it's great.
And not that the government job is bad. There's people that work for the government, they love their jobs. And I don't want anyone to ever get the impression that we're suggesting that, hey, become a real estate investor and you don't have to work anymore and all that kind of stuff. I think it's commendable for people to stay in the job. But for Tony, Tony's wife, for his family, it wasn't for you. You wanted to be more authentic to the way that God's made you and feel like, hey, I want to do something else, and this has allowed you to do it.
I didn't want to be on my deathbed thinking I could have done a lot more. And so that was really the drive for it. And now I'm at a point where we can teach our daughter and our son, okay, well, this is what real estate's done for us or for me, and so we're passing that on to them as well. When we first started out, we used to take them out to our multiplexes where there would be coin-op laundry, and we would task them with cleaning up the laundry machines, right? Taking out the lint, and they would get to keep the money that was in there for a job well done. So it's just, teaching them all those type of things now.
Very cool, very cool. I live in the GTA. I lived in Toronto, I lived in Vaughan and Newmarket, now I'm in Brampton. But I would write offers on properties in Edmonton. I never had to see the properties. I had everything set up. Here, this show is being aired all over the GTA. It's being aired in Ottawa. But for the people that are living in Toronto, and Tony's on the show, and he's come all the way. Talk about, how does that work? If somebody, wants to invest in Ottawa, and we'll talk about some of the reasons, how would that work? What's the process? Do I have to come down there? Is there a team set up? Do I just write an offer from here? How would it all work?
That's a great question. Because of Ottawa's stability compared to many other markets, we have a lot more investors coming into the city now looking for properties. So how we work it is
that don't live there.
That don't live there, correct. They're either out west, or they're down east, or even from this area. And so we ask them to contact us, and we really want to get to know them. For us, it's really getting to know their why. You ask me, okay, what's my philosophy? Well, I want to find out their philosophy as well. So why are you investing in real estate? And it can't be for money. It has to be something else other than money. And then we ask them, okay, what kind of finances do you have? What's your financial sandbox? So we know how much they can play in. And then we need to get to know their risk tolerance level. What can they stomach? Are they looking for a Class C property, which means a property that the tenants may be low income, or the property is not in great shape, or are they looking for something more turnkey? And then we put all that information into a blender, and that gives us the strategy to help them get where they want to go.
Okay, and so is there some sort of property management in place if I want there to be? If so, let's talk about me myself. If I find that the fundamentals work well in Ottawa, but I don't want to go down there, I don't want to manage. It's a business. I'm an investor. Are those types of things in place?
Correct. Yeah, we have our property management teams in place, and we have several contacts. So recommend you call a couple of them to find out what they can offer and see if you can work with them.
Okay, great. So tell me about Ottawa. What's happening there? Obviously, you're investing there. You're helping other people to invest there. What makes it attractive? What's going on?
There's so much going on in Ottawa. In years past, people would think of Ottawa, let's say, as a government town, which it still is, but very staid, very gray type of city.
Sure.
But it's transforming now because of all the major projects that are ongoing. We have the government jobs, the federal government jobs that employ 110,000 people in the city, and those are also well-paying jobs. They're not minimum wage, so that when rent increase time comes, they're able to afford it.
Sure.
Or if you want to increase the rent to market, well, they're able to
And so
afford
why
it.
you're saying that it's important is if I have an investment property in Ottawa, you've got over 100,000 people that work for the government. They have some great incomes. Not everybody wants to own, and so that I'll be able to get a great tenant to be able to rent out my property.
Absolutely, and that doesn't, we're not even talking about the high-tech sector in the West End, the 4 post-secondary colleges and universities that we have in Ottawa, and the hospitals as well.
The hospitals, and there's a great education system there. There's universities, a couple universities, and are you a fan of student rentals? What are your thoughts there?
I think student rentals are pretty good. They're in Ottawa, they work well. In terms of students, I think they get a bad rap a lot of the time, and I try to look at it a different way. In my own experience, I've seen adults who are worse tenants than students, and many students are, if you can just have that mindset knowing that, okay, they're going to have some people over, and they might be a little bit noisy and dirty at times. If you screen them properly, then they'll be good tenants. If you look for 3rd and 4th year type of students, that helps. And they're not professional tenants for the most part.
Yeah. You know what helps with that, and it's with James, Shannon, yourself. I think what really helps is to be able to have the coaching side that comes from you as well, because there's people that can show me headlines all they want about the nightmare, tenant stories, but if you do it properly, if you do your due diligence, listen, we've all had properties, and I appreciate, Shannon talking about some of the things that she would do differently, but we all would do things differently, as we continue to grow and to learn. But I think that's very important to have some sort of mentorship when it comes to investing in real estate.
Absolutely. It helped me initially because I made some of the biggest life experiences, I guess, mistakes when I first started out, and I had a lot of help learning how to not make those mistakes anymore. I learned from my own experiences, but I had a lot of guidance, and I still have that today.
And when we talk about mistakes, we're not talking about losing money per se. I mean, real estate can be very forgiving as well, right?
Absolutely.
You might not be making, when I say mistakes, I mean, I don't think I've ever lost $1 in real estate or an investor's dollar, but I could have made a lot more, and we could have done a lot of things that were, the processes. I think James was talking about the 80-20 rule, the Pareto principle. There's different things that you can do that can still give you time, and so you're not having 2-3 jobs because you have 2-3 properties, so to speak. But it's just a learning curve. We can always do things better.
That's right. Right, and it's just learning how to perhaps increase the income, reduce expenses, right, to make a property more viable so that you have more time to spend doing what you want to do.
Absolutely. So what is your favorite type of investment property in Ottawa?
Right now it's really finding a property, and we just add a secondary dwelling unit or a basement apartment.
Okay.
That's really the biggest bang for the buck in Ottawa.
So in Ottawa, what am I looking for? What are you helping me look for to do this? Because we don't want to spend a lot of money turning the basement into an apartment, a secondary suite, an income property, as my good friend Scott McGovern would call it. So what you're saying is we want to buy probably a raised bungalow, I'm guessing, or a 2-story, but it's already got the nuts and bolts to be able to create an income suite in the basement. What are we looking for in that property in terms of ceiling heights and side doors? Right. And talk to me a little bit about that.
First, it's really, Ottawa is great for the bylaws. So in the city of Ottawa, you can have a bungalow, a single-family home, essentially any type of single-family home, a semi-detached home, row house, townhouse, freehold, or condo.
Okay.
You can have a duplex, a legal duplex, and you can add a basement apartment in that as well.
So all those things that you mentioned, a detached, a semi, a townhouse, condo or freehold, already existing duplex, side-by-side, triplex, all of those, the bylaws in Ottawa allow you to build a basement apartment?
There are 2 exceptions, but you can do that throughout the city.
Wow.
And so
they're encouraging You know, I guess a little bit like Barrie, they're encouraging for people to do this so that people have a roof over their head.
Shannon talked about the Affordability Act, and so that's where the strategy, and so that's why it's coming down. So we look for properties really in certain areas. We're looking for the fundamentals, the strongest areas, so that the investors get the biggest bang for the buck.
What are some of those fundamentals?
Transit, for one. And so, for example, near Algonquin College, for people who are familiar with that, well, we know that the LRT, the light rail transit system, in 2023 will be going right up to the college. The student population growth, so population is growing very fast in that area. We also have other in Canada is the high-tech sector that I mentioned a little while ago, and there's city offices across the street as well. So all of that is happening right in that area. So we're looking in that general area. And as a result, the city jumps in and sees that all this activity is happening, and they start the gentrification. So they're improving the streets, they're improving the sidewalks, they're putting up flower pots. You know, they're just making it prettier.
Very cool. Very cool. And so when I'm looking at a property there, what's my budgeting? I mean, what can I get in on, you know, kind of average price to be able to look at a single dwelling that I want to put a basement suite in? You know, what's a comfortable, you know, price range?
We're looking anywhere between, because we can do semi-detached, which are cheaper and much lower in price. We're looking anywhere between $280 up to about I'd say $380 or so. That would be the max. And so
somewhere around the low threes, 330, 340 is an average we're getting into, and I can do that with a semi-detached property where I can rent out the top and I can rent out the bottom once I build a suite. Because once you build the suite, you're increasing the value. I can pull money out if I want, I can leave it in, so on and so forth. And it's obviously 20% down, so let's call it, you know, $330,000. I need $66,000 to be able to put down on that property plus closing costs. So again, I'm in for $75,000 and I'm good to go. Does it need much work? Obviously, we're building a suite down there. An average cost to be able to do that?
We're looking minimum $70,000.
$70,000.
Yes, and with that, we're doing some work upstairs. We're looking for these type of properties for clients. We're looking for ones where the upstairs is already done. We don't have to worry too much about it. And also the outside.
Okay, cool. Well, listen, Tony, it's always great to have you on the show. It's always great to meet you in person. I love speaking with you when we're speaking together and teaching people. Your website's there. We've got to catch up again soon. Thanks for being on the show.
Thanks for having me, Rob.
Yeah, I appreciate it.
Take care.
My good friend Tony Miller, we're talking about how to invest in Ottawa, what to invest in Ottawa. You don't want to go anywhere. I'll return with my closing thoughts in just a few minutes. Thanks for watching, everyone. If you have any questions pertaining to this show or there's a topic that you would like covered, please visit www.rogerstv.com. Hey, it's Rav. Welcome back to the Everyday Investor. It's been a phenomenal show. So grateful for the guests that could come on. We learned a little bit about Barrie with Shannon. We learned a little bit about Hamilton with James. Tony was talking about Ottawa. Some great places to invest. You don't really have to invest in your own backyard. That's kind of really the whole point of the show. If you missed the show, please go to rogerstv.com. Make sure you find when it's repeating all this week. But yeah, the whole point is we just want to put our money where it's going to grow. I mean, when you invest in stocks, you don't really invest where if the company's in your own city, you just invest in whatever you invest in, perhaps. And it's the same thing with real estate. We don't have to really have it in our own neighborhood. There's people in place. I know that all three of my guests, James, Tony, Shannon, they have property managers in place. They have systems and processes in place. So it's really great. I personally have invested in different properties about 30 years ago. I'm 45 now. So when I was about 16, me and the woman that I loved and left, Rav Toor, we bought a little townhouse in Kingston, Ontario. And, you know, it doesn't necessarily, we were living there and we moved away. And so you don't have to invest in your own backyard. Make sure that you invest where the returns are best. You always want to ask lots and lots of questions, but real estate investing is your friend. Never, ever be afraid of it. Thanks again for watching. On behalf of Rogers TV and myself, Rav Toor, we'll see you next week, same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.